Value of inventory. XYZ Co. sells 3 products, A, B, and C. The following information was available at the year end. Original cost: A, $10 per unit, B, $13 per unit, C, $9 per unit. Estimated selling price: A, $13 per unit, B, $15 per unit, C, $19 per unit. Selling and distribution costs: A, $5 per unit, B, $8 per unit, C, $9 per unit. Units of inventory: A, 200 units, B, 150 units, C, 300 units. What is the value of inventory at the year end? Answer: inventories are measured at the lower of cost and net realizable value, or NRV. Net realizable value equals the estimated selling price in the ordinary course of business minus the estimated costs of completion minus the estimated costs necessary to make the sale. A. Cost $10. Net realizable value $8. Lower of cost and NRV $8. Units 200. Value $1,600. B. Cost $13. Net realizable value $7. Lower of cost and NRV $7. Units 150. Value $1,050. C. Cost $9. Net realizable value $10. Lower of cost and NRV $9. Units 300. Value $2,700. Value of inventory at the year end $5,350.